standardize your rate, that according to that what would be the value of your lost. This is your idle time variances. And the last variances is labor efficiency variances. Labor efficiency variances is all about comparison of time. So that means the how much differentiate and how much differences has been raised from the time concern. So we need to compare the standard time minus actual time, and their difference will be multiplied with the standard rate. So labor efficiency variances, it is all about a comparison of standard time minus actual time, but this differences multiplied with the standard rate. So now we have a standard rate is 1.5, standard time we have 1600 hours, actual time we have 1500 hours. But if you have idle time along with the actual hours, then actual hours cannot be taken here exactly which was given in the question. We need to find out actual time, and that is also effective time. How you can find out actual effective time? That can be find out actual time minus idle time, and idle time is 50 hours. So in that case your actual time comes to 1450 hours. So we need to calculate it, the how much actual hours paid. We paid actual hours is 1500, but how much time is actually not worked? We paid more for more hours, but certain hours were not worked. We did not get any output in those hours. It means that we need to rectify that and find out the how much actual time effective. And actual time effective is only 1450 hours. So that's why we consider here actual times effective 1450, standard time is 1600 hours. Difference between these two will be multiplied with the standard rate. So that comes to 1.5 into bracket, that is 150 hours. 15 15s are 225. So this is your favorable. It means that 225, it's an effective labor variances, and which shows the some amount of effectiveness would be identified in case of the amount which we determine, and that's why this is effective variances. As we already discussed the one problem for each variances, material variances and labor variances. Now here I am taking one more problem regarding the material variances. Here this material variance problem is little bit different, because of we need to calculate a certain values before the variances has been calculated. Not only even that, here we are taking, instead of one product, taking three products. That means there are three different type of materials, right? So the three different type of materials is required in the organization, and in this way how the company is trying to manage the whole cost variances or whole material variances. So your questions can be referred problem number 3, and for that we need to calculate the some amount of variances. The problem is like this: standard makes to produce 1 unit of product as follows, and they were actually offer 3 different materials: material A, material B and material C. And that all these 3 materials have a certain information of manufacturing of units and along with the price. This is standard. The standard has been given in the first part. Then during the month of April, they were manufactured 10 units actually, and the consumption was as follows. So that means after they consider the, instead of 1 units manufactured which was actually given in the standard price and standard information, now they are manufacturing 10 units, and what amount of expenditures are incurred at the particular rates, it is given for all the 3 materials, and that is for 10 units. Now on the basis of this standard informations and actual informations, we have a one clear-cut observation, but I'll tell you later on. Out of this all information, they ask to calculate all material variances. So they ask to prepare material variances. Now, my first observation from this question, as maybe you also rightly pointed out, that the 1 unit price is given for standard information, and when they actually manufactured, the information is given for 10 units. It means when you want to compare, the standard information has to be upgraded. That means we need to identify, instead of 1 unit standard information, we need to convert into 10 units of the standard information. So on the basis of that, we will actually try to identify the what informations we would be identified and how it would be changed. Let's see, we'll just prepare some amount of calculations, and on the basis of that calculations we will find out all the remaining variances. Now let's see how the things has been calculated. Here for that we need to prepare a table, and the table is preparing like this. This is your particular, or you can say the materials. Then the two other things, one is standard information for units, and this is actual information also for 10 units. Now that information we have quantity, rates and value, rate and value. Same way for actual also, quantity, rate and value. As I mentioned in the question, we have 3 different materials. So material A, this is your first concern. Now see the question. In case of standard information, first we will derive all the standard informations, and we change the standard information. Instead of the 1 unit, we will convert into a 10 units. It is given for material A is a 60 units at the rate of 15 per units. So 60 units is required, 60 kilogram of material or whatever, 60 quantity. Its quantity has not been mentioned in specific unit. We assume that it may be a 60 kilograms. So 60 kilograms of quantity it's required for 1 unit of manufacturing. Then how many kilograms, how much kilogram required for 10 units? So in this way 600 kilograms is required. Rate would not be changed, it remains same 15, and this comes to value is 9,000. So here for the material A, for 600 quantity, 15 rupees rate and 9,000 rupees is a value amount. Now for material B, it is as per the question, for 1 unit manufactured, they needs 80 units. So now if it is required 80 units, so material B and 80 units for one particular, or 80 kilograms is required for 1 unit. For 10 units is required 800 quantity. So 800 quantity with the rates of 20, it comes to 16,000. 800 into 20, the total amount of value is required 16,000. Now moving to the next is material C. How many kilograms required for 1 unit manufactured? That is 100 units or 100 kilograms. 100 kilograms is required for the manufacturing of 1 unit. So for 10 units they need 1000 kilograms, and the rate for that 1000 kilograms it comes to 25. So here the total amount and total value is required, standardized for material C is 25,000. That means the company is assumed for material A, for manufacturing of 10 units, they are ready to spend 9,000 rupees. For material B for 16,000, and for material C it's ready to provide 25,000 rupees. Now see, this is a standard information. Now we have an actual information also. Just compare with the actual informations, how much material actually consumed and at what rate it is actually incurred, or what rate it is purchased from the market. Start with this material A, and the company actually purchased 640 units at the rate of 17.50. 640 units purchased at the rate of 17.50. So just compare the things. For 10 units manufacturing, the company standardized 600 kilograms at the rate of 50, but actually it comes in the business 640 units. That means 40 units and 40 kilograms of material more than the standard. That's a one observation. And the another observation is the rate is also not same. That means there is some variations in rates also as your standard as well as actualized. So there is a difference of 2.50 rupees, 2.50 per unit. So in this case there is some variations in this regard. Just see how much total amount of cost incurred actually in case of material A, that is 11,200. 11,200. Now we'll identify for material B, that is 950 kilograms at the rate of 18 per unit. At the rate of 18 per unit, and the total value spent, that is 17,100. 17,100 rupees spent for material B. And material C is 870 units. 870 units, and the value comes 27 rupees. Rate is 27.50 per unit, comes to 23,925. 23,925. Now on the basis of this, we would just going to compare how many total units is required, total quantity is required. Here requirement that standardized is 2400, and for the value of the standard concern, that is 50,000 rupees, and for quantity is concerned 12, 16, 1 carry 7, that's 16 and 24. So 2,460 kilograms is actually used for manufacturing of 10 units in all the three material A, B and C, where the amount comes to 10, 12, 2, 9, 12, 3 and 5, 52,225. From the prima facie observations of this table, you can easily identify that how many standardized quantity is required, that is 2400, and for that they are ready to spend 50,000 rupees, but actually they purchase a raw material from the market, that is 2,460 units, and for that they spend the money 52,225. This is a first part of this problem. Now from this information we will find out all the different variances. Let's see which are the variances. Now as per this calculations, we are moving to the next step, that is calculation variances one by one. Let's start with the material cost variances. So material cost variances formula is standard time multiplied by standard rate minus actual time into actual rate. And for this formula would be applying for all the three different variances. Instead of that, if you want to calculate directly with the comparison of this, then you can calculate like this: standard cost minus actual cost. If you apply this, because we have three different variances, we need to calculate it and apply this formula for all the three different materials. That also you can do it, but here we have an option. You can directly apply standard cost minus actual cost, and that is your material cost variance. Ultimately, how much amount of cost incurred for material, different type of material purchase, standardized, that is 50,000 rupees, but actually we spent 52,225 rupees, that is more than the standard amount of expenses. That's why your actual cost is higher than the standard cost, that is 2225, your answer is adverse. As I mentioned, if your standard expenses is lesser than the actual expenses, it's always considered your adverse. That means it's unfavorable. You are spending more value, more amount to purchase a respected raw material in the business than the standard which you determine on the basis of your historical cost and predetermined cost. So this is your MCV. Let's move. The next is material price variance, and the material price variance, as I already mentioned in the first problem, that it is a comparison of rates. The material price variance is all about the comparisons of rates. So the difference between the standard rate and actual rate will be multiplied with the actual quantity. So now material price variance formula is actual quantity into bracket standard rate minus actual rate. This is your formula for material price variance. This formula would and cannot be compared in general like the cost variances where we were incurred a total amount of cost. We need to calculate individually for materials. So material A, their actual quantity is 640 units. Into bracket, material A standard rate is 15, their actual rate is 17.50. It means the answer would be 640 into minus 2.50 comes to 640 minus 2.50 comes to 1600 rupees, and this 1600 rupees, your answer is adverse. Why it's an adverse? Because of it comes negative, minus answer. Your rate, it comes minus 2.5, and this shows the situation is the amount of standard rate and actual rate, it shows a negative impressions where the standard rate is very less than the actual rate available in the market, and that's why in case of material A, it's your adverse. Now we'll see in case of material B. See the material B, and their actual quantity is 950 units. Into bracket, the standard rate for material B is 20, where actual rate is 80. Very clear cut informations. It's reflected from the information that the value of standard rate is higher than the actual. It means this answer most probably would come in the favorable concern. So see here, 950 into 2, because of the differences is standard rate is higher than the actual rate, so it means your presumed rate is estimated rate is higher than the actual rates, but actually you try to control and you may be controlled also, and because of that your answer is favorable, rupees 1800. So for material B, it is 1800 favorable. Now we'll see in case of material C. In case of material C, the standard quantity, actual quantity is 870 units, and the rates comparison is 25 rupees rate is for standard and 27.50 actually incurred. So 870 units multiplied by minus 2.50, because their actual rate is higher than the standard rate, and that's why it's negative. Just identified what would be the answer. It is 2175. This is adverse. Adverse because of the rates of standard and actual shows a differentiate, and that actual rate is higher than the standard rate, and that's why here in case of material C, it's 2175. It is 2175 is adverse. In case of material B, there's something changed. The material B, it's 1900. The multiplication, it comes to 950 into 2, it's 1900, and the 1900, it's favorable. Now we'll just make a total. The total of the all three variances. One is only favorable, there are two is adverse. So first we make a total of adverse. 2175 plus 1600, it comes to 3775. Total adverse is 3775 minus one favorable, that is 1900, which comes to 1875. 1875 overall adverse. This is your material price variance in all. Material price variance in